Did drug money save the global economy in 2008? Or is it just one man's opinion? Hello, and welcome back to another episode on my YouTube channel. In today's video, we'll try to understand if drug money was the only thing that kept the world economy from collapsing in 2008. During the 2008 economic recovery, the banking industry saw real estate collapse, and because drug money was the only currency available to prop up the banks, the economy survived what appeared to be a catastrophic crashdown. One individual spoke out about where lifeline economic saving money came from, but many experts and financial pundits disagree. The true question, then, is whether drug money saved the world economy in 2008. Where did all the drug money originate from? And, if not from drugs, where did the money that saved the banking system in 2008 originate from then? So, before we get into the pharmacological side of things, which you're undoubtedly eager to hear about, it's crucial to understand what occurred in 2008. You know, 8 investors were seeking for anything to invest in because interest rates for traditional investments were not extremely high, which meant that those with money couldn't quickly expand their wealth using these old tactics. As a result, something called a mortgage-backed security was established, which were effectively mortgage bundles. These appear to be good investments in part because they are attached to a physical property. If someone can't pay their mortgage any longer, the bank simply sells the house, and because house prices normally rise over time, mortgages were considered as a secure venture. After all, the worst-case scenario is that the bank makes a profit on the sale of the home. As a result, these mortgage-backed securities were in high demand. To meet demand, banks raised the number of mortgages available by broadening who they lent mortgages to, resulting in the now infamous subprime mortgages. And as a result of the bank's curiosity, and maybe greed, loans were made available to persons with poor credit who could not previously secure a mortgage. Because subprime mortgages were new, there wasn't much evidence to illustrate how unsafe they were, so everyone was happy and made a lot of money for a while. However, mortgage bundles consisting solely of subprime mortgages were at the highest rate, which meant that certain institutional investors, such as pension funds, which require AAA ratings, couldn't be sold. So, collateralized debt obligations, or CDOs, began to be developed, which are bundles of any type of secure debt, including subprime mortgages backed by securities. These CDOs had extraordinarily high ratings because they were thought to be diversified, which meant that the risk was spread out across the financial system. The problem was that these subprime mortgages were frequently provided with low-interest introductory rates. However, when these deals expired, repayments unexpectedly increased, leaving many individuals unable to afford them, resulting in many mortgage defaults. The banks began selling these residences in order to recoup the last mortgage payment. As a result, there were many more residences on the market. And, as we all know, when supply exceeds demand, the price falls. As a result, property values began to stagnate and eventually plummet. Because banks could no longer recoup the money on the mortgages, a larger problem arose. And because of how these mortgages have been sliced up and distributed across the banking system, nobody knew how vulnerable they were to these subprime mortgages, which caused banks to deleverage and get rid of CDOs and MBs, is as rapid as possible, thus depressing the property market. This was eventually the housing bubble's demise. Many banks lost a lot of money, with some requiring government bailouts or assistance, with big names like Lehman Brothers entirely collapsing, and the recession had well and truly began. But what does all of this have to do with drug money? I mean, how did drug money ever enter the picture? The failure of banks and the bursting of the housing bubble, on the other hand, resulted in a liquidity crisis.
Let's talk about the speed with which we are watching this market deteriorate.
We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Simply put, banks lacked assets that could be converted into cash fast. It's great to have $1 billion in stocks. However, if it takes several months to convert that $1 billion into tangible cash when you need it, you have a liquidity problem. And this is critical in order to keep the financial system working, loans repaid, and so on. This is where the drug money comes in.
That's about to go bankrupt. Now, you see how the fire spreads from one company to the next company, and then everybody looks and says, ooh.
According to the Executive Intelligence Review assessment, the financial speculation bubble is almost 10 times larger than the liquid secured liabilities. According to the research, the chronic shortage of liquidity and efforts to remain afloat during a crisis foster not just tolerance for illicit money, but also a mentality that encourages the availability of such money. To summarize, liquidity is typically a problem when there is a major speculative bubble, but especially after a crisis like the one in 2008. Banks appear to have gotten so desperate for liquidity that they have resorted to taking drug money. The same paper uses Wachovia Bank as an example from early 2010. The bank reached an out-of-court settlement with U.S. authorities, paying $150 million in return for allegations of money laundering being withdrawn. According to the federal prosecutor, contempt for our banking regulations provided multinational cocaine traffickers with a practically free hand to finance their activities through the laundering of drug revenues. This bank alone was found responsible of shifting a third of Mexico's GDP in currency exchange businesses. It is in Mexico. This was a front for money laundering, although over a longer period, and the bank was discovered. According to Antonio Costa, the former head of the UN Office on Drugs and Crime, more than $352 billion was pumped into major international banks during the 2008 to 2009 crisis to avert liquidity shortages. He further stated that when the money was pumped, it was used to support activities like interbank closure, implying that larger banks were also participating.
I don't think I'm going to be able to make payroll next week. Think about that. And you might say, so why couldn't McDonald's do this? Well, guess what? They rely on Bank of America to roll their paper, and they're worried the Bank of America is not going to do it.
According to the EIR investigation, even Bank of America was revealed to have permitted transactions involving the sale of 22 tons of cocaine. Again, it's difficult to determine how much money was laundered through each bank, as many were undoubtedly missed. While drug money may have been used to prop up the financial system following the 2008 financial crash, the EIR report goes even further, claiming that not only did money laundering save the economy in 2008, but that drug and global drug traffic money are not only valuable elements, but also a vital and indispensable segment of the entire monetary system as donors of liquidity, which is so scarce. According to this data, hydrocarbons such as oil and gas account for around 6% of global trade. This is also true in the drug trade. The research concludes by arguing that a radical revolution is necessary to eradicate global drug trafficking. Indeed, it is such an important source of cash for banks that it is rather worrying, and something significant must be done to alleviate the world's dependency on drug money. It would be irresponsible not to point out some of the flaws in this idea at this point. To begin with, as we stated at the outset, it is merely a theory. However, some have claimed that it's a plausible theory, even though central banks provide more firepower by injecting so much money into banks, which helped deuce the troubles of the 2008 financial economy crises than drug cartels and saving the banking industry. According to the IMF, from January 2007 to September 2009, large US and European banks lost more than $1 trillion on toxic assets and bad loans, and more than 200 mortgage lenders went bankrupt. Many prominent institutions failed, were forced to be bought, or were taken over by the government. According to the UN, drug gangs presently make most of their money and are estimated to be worth £352 billion. To evade identification by authorities, they have often kept the proceeds in cash or transferred them abroad. Evidence of drug money going into banks is thought to have come from officials in the United Kingdom, Switzerland, Italy, and the United States. Because this debate continues to this day, each person tries hard to defend their position, claiming that their defense statement that drug money was the savior of the 2008 crises is true and authentic, while others will continue to claim that the central bank was responsible for preventing the financial industry from collapsing in 2008. Please share your ideas in the comments section below, subscribe to the channel, and click the bell icon to be alerted whenever I upload a new video. See you in my next video. Stay safe and motivated.